So we are recording. Hello, people. Hello. Let me just find our little disclaimer thing before I say anything that gets us in trouble. Bear with me a second. Is the disclaimer on the Facebook, Ninja?
I'm not too sure.
Let me see if I put it on the Facebook, because then it's easier. Then I can just share screen to the Facebook and then just read it from there. No, it's not. Okay, let me.
Just gonna go off camera until I come on about HEX.
No, that's cool. Let me share this disclaimer, and I need to upload all the stuff that I'm going to be talking about today as well. Okay, hold up. Yo, Aisha. Yo, Hummer, what you saying? Yo, AJ, what you saying?
Hey.
What up?
Hello. What's good?
All good in the hood. And then that one. I want to talk about that. Okay, how I'm gonna get through everything that I want to talk about in the designated half an hour that I'm giving myself, we will see. And then that HEX one. And then clipboard. And then tonight we talk about HEX. Okay, I'm gonna get started. Whoever's here is here. Whoever isn't here isn't here. Cool. Let me just load up Facebook. So, where to even begin? It's been a very interesting week, and I've had a lot of people, just a crazy amount of people, telling me crypto is dead. Telling me, I need to get out. You need to get out of crypto. Mike, you don't know what you're talking about. Mike, it's all crashing. Like Bitcoin's worth nothing. Oh, like it's all a scam. And I'm like, it's not a scam. Yes, crypto is dead for the meme tokens for the time being. Yes, there is regulation coming in, like I suggested would come in about 3 months ago. And in fact, that regulation is actually good for the market. Why? Because it means people will lose less money, like they've done. 2, it'll mean that the big whales will feel more confident in the space and will pour more money into the markets. So again, that's fantastic, because it means the assets that you're in now, if they're quality and if they are actually what we class as assets, which means that they probably have a use case and probably have some kind of value to the world, then they're probably gonna go up in value. Whereas, yeah, that's so what I'm gonna do is I'm just gonna talk through some stuff that's just kind of really shows that, you know, crypto really isn't dead and it really isn't going anywhere. So let me just share my screen. And we've obviously been joined by none other than Joel, the king of HEX. Let me just do my little disclaimer before we even go on to this little thing right here. So disclaimer, we are not financial advisors, myself and Ninja. We do not claim to be financial advisors. All investment comes with risk. Everything on this show is for entertainment and educational purposes only. If you are unable to mitigate the risks before making an investment decision, please contact us and we can put you in contact with a financial advisor who we are working with, who works with several very credible people in the crypto space. So once again, please do your own research. So this first thing that I'm going to talk about is the current Bitcoin holdings of Bitcoin ETF holdings by a Canadian ETF. Now, as we can see, this black line, hopefully you can see it, is a bit faint, but as the price was dipping, what were they doing? Purchasing more and more Bitcoin. On average, they were actually purchasing 86 Bitcoin a day. Now, why would a massive fund purchase 86 Bitcoin a day at such a low price if it was going to die. Who knows? So then we've also got a massive change in the liquidity in Bitcoin. Now, obviously, if there is more decreasing liquidity, then that's not really great for entries and for exits. If there is an increase in liquidity, then that means people are being very active on the markets. And as we can see, that's slightly starting to come back up. Now, the reason it dipped around here is obviously because people were getting out. Now, when we look back here, when it decreased, what happened? The price went up. So we're going to expect to see something similar continue from here, and expect to see people getting in and out. Now, again, what we have to bear in mind is this liquidity most of the time isn't actually from retail, it's from the whales. Also, we've had people pointing out to me that Jim Cramer is saying that the ARK Invest phenomenon appears to be over, despite ARK being up. And I'm just like, what are people talking about? Like, are people even looking at the charts when they're talking? I highly recommend looking at the charts before saying that ARK is over. Yeah, that, especially if ARK have announced that they've bought into the Grayscale ETF fund, which we're going to look at that in a sec. Now, again, this is just a headline that's floating about. Now, why would this headline be floating around? Maybe because the ARK portfolio has absolutely been destroying traditional hedge funds and portfolio companies that normally offer their clients 10%, 15% a year, and ARK has been producing 40 to 100%. It's not really good for the neighborhood. It's not really good for them. So they're going to kind of try and use the media outlets that they own to kind of put out a bad word about ARK. So in terms of, let's just skip that one. This one I found quite funny, that the UK police have actually seized 158 million US dollars of cryptocurrency in a money laundering crackdown. Now, I don't know if you're aware, but this is not the first time that the police have seized cryptocurrency. They've been doing this since 2013. And yeah, so the police actually own, the Met police own quite a substantial amount of Bitcoin and a substantial amount of Ethereum. I wonder what happens with it, because I'm just curious. Like, when they seize all of this, and the most interesting bit about this one is 158 million of cryptocurrency. That means it's not just Bitcoin that they've seized. So who knows what they've seized, and they're just what's gonna happen with it? Like, in 10 years' time, when that 158 million worth of cryptocurrency that they seized just from this one raid that they're announcing, they've done it multiple times, is worth what, 1.5 billion. What happens to it then? You're telling me that all 1.5 billion is just going to stay in police custody? I find that very hard to believe. So yeah, that's just the police are also buying the dip, but instead of buying it, they're just stealing it. So yeah, I thought I would look at that. One thing that is of major concern to me, which I'm going to keep flagging up because the reading that I've been doing on it is kind of scary, is Tether. Tether and USD coin, obviously the whole initiative and the idea for them is that they are paired 1-for-1 with the US dollar price and value. However, we can see that they actually don't have as much actual US dollars. The US dollars that they actually have as a company make up 2.9% of the assets that they own. So if it's just cash, you would like a trade of $1 gets 1 Tether, you'd expect that to be about 30, 40, 50%. However, they're backing up the majority of Tether with commercial paper, which is money owed to them, secured loans, and the dangerous bit is these corporate bonds. Now, if these bonds are AAA bonds, which are the kind of bonds that you get from taking on companies like Apple's debt, which you know that they're going to be able to pay off, That's okay. If they are taking bonds that are junk bonds from really shitty companies that aren't actually making profit, that are just paying out high dividends, then this is a problem, because when the stock market collapses because of these, there's tons of these junk bond companies, and this is what people are saying is going to cause the next market crash, is during this kind of lockdown recovery, companies that actually weren't doing that great before lockdown are now all of a sudden doing great. And because of that, people are pouring loads of money into them. Case in point, companies like, I don't want to call them out, but Cheesecake Factory, and companies like, let me see, well, the worst ones are things like GameStop, and AMC. Like, yes, AMC is a great concept and people can't wait to go back to the cinema. But let's just be honest. Were people going to the cinema more or less before COVID? I personally don't think people will go into the cinema more. So having bonds tied up in a company like that probably isn't good. And again, we just got to look at these percentage ratios. Like, they're just not that tidy. And I think the problem with this and how this will affect the crypto market is because if the stock market collapses and pulls back by 10, 15, 20%, which it's due to do sometime soon, probably towards, I'll have to go to the charts to give an accurate prediction of that. But it'll then mean that also people trying to get in or out of crypto won't be able to, because the Tether won't actually be able to back itself up. So yeah, it's an interesting one. Do some research into the whole Tether debacle. And what are the chances that the weekend and the exact same day that all this stuff comes out about Binance being barred and banned in the UK, and it's, by the way, if you look into it in detail, what it actually is that they were planning on doing a Binance.co.uk, and they're having a bit of trouble launching that. And on top of that, the UK market doesn't really want people to be doing options trading on leverage with margin. Just like how we can't get Robinhood here, Binance allows people to trade cryptos on margin, which, if you ask me, is complete insanity and should be stopped and should be regulated. So well done UK, well done Binance for shutting that down. Now, Binance itself, if most people that are using it are probably using Binance.com, which hasn't been shut down, which is actually registered in the Cayman Islands. So any UK regulation doesn't actually affect it. And if people were worried about their Binance app being shut down, they probably should have just checked their Binance app to see if it was available, or see if they got any emails from Binance saying that they were terminating stuff, which I didn't really see happen. But people are blaming the dip of what happened over the weekend on this. But what actually happened was options contracts, like we were talking about, were all set to expire. So that's billions, actually a record number of options contracts expired. And if you know me, I love talking about the witch, the quadruple witching that happens. Oh, look at that. The last Friday of the month is the time when Bitcoin dips. What are the chances that Bitcoin would dip every time that options contracts expire? What are the chances that it takes a big dip during the quadruple witching? What are the chances of that? But the most significant thing to look at and to note is this moving average. Did it actually dip below it? No. So is that a buy signal or a sell signal? Looking at the past performance, it dipped, touched the average, went up 99%. It dipped, touched the average, went up 44%. Say no more. Please do your own research. So one of the unfortunate things that's happened is that short-term holders, so people that haven't actually been holding Bitcoin for that long, have actually sold their positions, and there's more short-term holders selling their positions than there was in the 2020 COVID pandemic, which just doesn't make any logical sense to me. And the long-term holders are actually buying more than they've ever bought before. So it's just a case of the same old thing. The rich are getting richer and the poor are getting poorer. So as we can see, there was actually 3.45 billion of net realized losses. And what does net realized mean? It means on the screen, it might be showing you a loss, but it's not a true loss until you actually press the sell button. And this is what a lot of people did, unfortunately. So bad times. So we can see here the actual net realized loss for the unfortunate people that actually sold their Bitcoin yesterday. Bless them. Oh well. But other big news, again, proving that crypto kind of isn't going anywhere. There's a big bank called BBVA. It's a Spanish bank. They've actually also decided to join a lot of the Swiss banks and to allow people to now start buying Bitcoin and Ethereum, and to also stake Ethereum through them, accessible only to their high net worth clients. So the regulation and this whole roadmap of how I thought things would play out is kind of playing out that way, that they would get everybody into meme stocks, get everybody distracted, make loads of people lose loads of money, and then say to governments and so on and so forth, we need more regulation. Bring in the regulation, make it harder for the everyday person to get into it, even though they're probably selling it anyway. Then what they would do is, once it's regulated, get all the banks to get in, the banks make the price go up, the whales make the price go up, the banks and the whales win, and then the everyday person is then 2 years, 3 years later like, oh, actually, I want to get back into this crypto stuff. But then there's so much regulation and they haven't got any proof to show that they've actually been handling Bitcoin or cryptos for the last couple of years. So then guess who they have to go to get access to cryptos? The banks and the whales. And guess what kind of percentages the banks and the whales are charging as a performance fee? 20%. Now, I don't know about you, but I'm not trying to pay somebody 20% for something that I can do myself. But, you know, so again, one of the major things that I've been following is the flippening. So what is the flippening? The flippening is where it's predicted that Ethereum is going to flip Bitcoin, just because of the Ethereum update with the whole staking thing. And because of the use case and the massive increase in NFT usage. And we've had the announcement that Disney is getting into NFTs with Ecomi. Definitely do your research on that one. Something I've invested in. Just a little disclaimer there. And Fox are also using Omi as well. So definitely check them out. So we're expecting a massive move with Ethereum. We're kind of getting a few clues on this from the Coinbase report. But we can see here, just in the left corner here, if we look at Ethereum, it's around inflows around 7.7 and minus 1.9. So it's actually 7.7. And then we look at all the other cryptos. If we look at Ripple, Polkadot, Bitcoin Cash, Litecoin, Cardano, Stellar, like Ethereum is almost like got 2 times the amount of money pouring into it from whales as all the other assets combined, which is kind of crazy. So again, that kind of shows that it's not going anywhere. One of the things you probably saw me talking about was the JP Morgan coin. So the JP Morgan coin has now been active and has been running for a while now. And surprise, surprise, guess what network it's built on? Ethereum. And it's used, surprise, surprise. So if you think that crypto is dead, why would JP Morgan be using Ethereum to trade bonds? And guess how much bonds they're actually trading through Ethereum network? 1 billion a day. But, you know, crypto is dead. It doesn't have a use case.
So just for context, Mr. Harden, could you explain to people who JP Morgan are and the significance of them?
Yeah,
Especially
so
new people in the room, the playback.
In fact, let's just go to my favorite website to just give that context for who the big boys in the game are. So those of you that haven't done a lesson with me before, I always start off all my lessons like this by showing you that who you think is the richest person in the world is a lie. What you think is a lot of money is a lie. We often think Bill Gates and Elon Musk are controlling Bitcoin and that they've got billions of dollars and they're changing the markets, when in fact there's companies. So just for context, Elon Musk is on what, 180 billion or something like that, or 80 billion. I can't remember what he's on. Whereas there's a bit of a difference between that and what Vanguard Group have got, which is 6.1 trillion. That's 1,000 billion. There is a big gap between. Let's just be really generous and say Bezos and Musk combined have 300 billion. There is a big gap between 300 billion and 6,000 billion, which is the amount of assets under management that just one of these whales have, and that whale that we're talking about there is none other than Vanguard. So let's have a look at some of these other whales and where they kind of rank in. We've got the likes of BlackRock, the big boys in the building who pretty much own everything on the planet, have 7.3 trillion assets under management. Vanguard 6.1 trillion, UBS Group 3.5 trillion, Fidelity 3.3 trillion, State Street 3 trillion, Allianz 2.5 trillion, and JP Morgan 2.5 trillion, Goldman Sachs 2 trillion, Bank of New York Mellon 1.9 trillion, and PIMCO. Now let's take a look. How many of these big players do we know are clearly investing in crypto? About 6 of them. So is crypto going anywhere? I don't know. I don't know. I don't know. Maybe crypto's dead and I don't know something. Maybe.
And just to give you guys some extra perspective, so JP Morgan are creating their own coin. JP Morgan assets subtotal 2.5 trillion, and the entire crypto space is worth 1.2 trillion. Ethereum market cap is on Ethereum market cap is on 243 billion. So basically the market, the total in dollar value invested in Ethereum is 1/10 value of JP Morgan Asset Management Company, approximately. And they're creating their own coin based on Ethereum, ERC20 token. In theory, the price of Ethereum should skyrocket, not just because of JP Morgan, obviously, but that's a big factor.
Major factor. And as we can see, yet another Swiss bank is getting into crypto as well. Now, something to note, just in tax alone in 2020, the whales paid out 2.68 trillion in tax. That's just in tax. So that's around 2 to 3% of the world's GDP. So just to give you a bit more.
And also double the value of the entire cryptocurrency economy.
Yep. So this little graph here is to show what the value of ETH would be if just 1% of all the transactions that the whales do went through Ethereum network. Just 1%. ETH's value would be around 40K and the market cap would be about 4 trillion. And that's just 1%. So, you know,
Wait, can I just fully make sure that I'm understanding and I'm not misinterpreting this information. So if 1% of all those taxes were paid through Ethereum network.
No, not the taxes, just their transactions, just the activity that is done by these whales.
Oh wow. So by 40,000, is that the price of Ethereum would rise to 40K per coin?
Yeah.
Oh wow. ETH to 10K, not financial advice.
Oh mate, 10K, no problem. Not financial advice, but you know. Then in terms of the whales that you want to look for is Grayscale. So this is the company that everybody, we can look at their market share in the kind of crypto space, who has the most. They are the company that are kind of buying up Bitcoin and ETH for other people. And what they're doing is they have launched, and they have been doing it for a while, their very own Ethereum options contracts and their own Ethereum futures contracts. Now, you know, I don't know what else to lay out on the line, but yeah, I think that is it. And then we've got this beautiful picture of the gains that were available on HEX. And I think that is a beautiful time to transition over.
Joel, are you here?
Yeah, I'm here.
Okay.
I'm listening.
Amazing. Welcome, Mike, to the chat. So, time for part 3. So, for those that don't know, the Monday call now has a new format. So, before, the format would be extreme game from Mr. Harding, a few gems from me, and then a Q&A at the end. Let me just kindly mute Mike and Adam. Now the new format is we want to spend the first half an hour giving you guys game, and then
Oh, thank you very much, Mike. I'm glad that you're enjoying it that much.
Okay, so so this is now part 2 out of 3. This is my very good friend Joel. He's also a member. Sorry, that was so funny. I'm trying to keep a straight face. He's also an educator at Blockchain Sensei, and he is here to to tell you guys about one of crypto's best kept secrets, which is HEX. Is it correct that HEX is actually a top 10 crypto?
Yeah, bro, obviously.
Yeah, for sure.
Yeah, man. Yeah, for sure, bro.
Hey,
All right.
baby.
Oh, we've been hacked
Shut your mouth,
again.
What are you
Yes.
asking sick for? Let me learn.
Daddy, chill.
Yo, kick these kids out, man. They're acting sick.
There we go. I think I've got rid of them. Didn't I say to you, Ninja, that we got
You like
hacked?
that ninja tea? Yeah.
I don't know where that one was coming from.
Okay, let's remove Annie.
Oh, it was Annie.
Go.
Oh, Annie is not okay.
Annie is not okay.
Annie is. Do you know what's so funny? I said to Ninja, we've got to be careful where we put the code out because we can get hacked, and it happened to me before.
No. Listen, like the meeting ID doesn't let you enter. I accepted those people in.
Ah.
Yeah, it's a password that lets you in. Anyway, okay, we're back. So okay.
But no more accepting anyone in.
No.
Unfortunately.
Okay, all right. Will, you're gonna have to be in the waiting room. We're gonna assume Will's a troll. Okay, cool. Joel. Go ahead.
Cool. Nice introduction there. So yeah, I don't know how many people have heard about HEX or not, but I'm basically just gonna talk about HEX and outline the system that it is. And at the end of the day, it's not a coin. Like HEX is not a coin, but you can buy HEX as a coin. HEX is it's a product, so it has a real market fit in the real world, not just in cryptocurrency. So yeah, am I the only admin now, or do you want me to let people in? Because I'm getting notifications.
I just made you a co-host.
We're not letting anyone else in.
Okay. So yeah. So I don't know how many have heard of HEX. I guess Mr. Harding, Fadlan, I guess you've heard of HEX before, right?
Well, yes, I'm personally invested.
Adam has, yeah. Cool. So HEX is a top 10 crypto. The question you posed, Fadlan, was it a top 10 crypto?
Yes.
Yeah. So the controversy with HEX is that it's not been put in the top 10 or anywhere near the top 10 by leading market sites like CoinGecko and CoinMarketCap, but on other sites it is clearly in the top 10, and we'll go into it anyway. But what HEX is basically a product to stake. So it's a staking product. So the traditional sort of CD in the bank, where you would put, say, £1,000 in the bank for 1 year, and because you've locked that £1,000 up with the bank, they will then after 1 year, maybe they'll give you a certain percentage interest on that £1,000. Maybe that's £100, for example, just pulling out figures. So the issue with this is that there's a central party in the middle. So there's always a central party that dictates the interest that you got to get, you know, and they are at the end of the day in control of your funds, and you don't know what a bank might do with those funds. You might not agree with what they want to do with their funds, but they don't have to tell you anything anyway. And so, yeah, that is the traditional product of a CD. It's a CD in US terms. I forget what the UK terminology is for it is, but basically HEX is replacing that, but on the blockchain. And the CD market is actually, it's a multi-trillion-dollar market in the world. So what the scope is for what it could become, you know, it's massive. The market cap, if it swallows up a lot of that business, then the market cap would be ginormous. I'm going to come to the questions in a minute. I'm just going to talk about HEX for now, and then I'll touch on everyone's questions. So you stake HEX, that's the main function of staking. And I've not seen any coin with as advanced staking models as HEX has. So you can stake anywhere from 1 day up into 15 years. 15 years is the maximum time that you can stake HEX. And the reason for that, it was just because of the something within the Ethereum code that it made it really expensive gas fee wise to stake it longer than 15 years. So the maximum time you can stake HEX is 15 years. And that keeps rolling, you know, tomorrow it'll be 15 years and 1 day. Every day it keeps going. So it's not like 15 years and then the whole system ends. It will keep increasing.
Sorry, Joel. Are you intending on sharing your screen right now? Just for the record.
Yeah, I am going to. Yeah.
Okay.
So, yeah, that's a bit of an intro about HEX. Yeah, let me just touch on the questions. Or maybe there's one. How many questions? Adam. Yeah, so Adam put, if value goes up, can you cash out the profit out? So yeah,
this is just somebody asking about crypto in general. There's
okay.
I'm monitoring the chat. There's no HEX questions at present.
Okay, cool. No worries. So yeah, I'm going to share my screen now anyway.
Whoever's invested in NASDAQ, I just got paid some dividend yields.
Peace.
Okay, so where I can start is coin ranking. This is just one website which is listing HEX. So this shows HEX at number 9 position. Number 9 position with a $21 billion market cap. If you check on CoinGecko, you check on CoinGecko, HEX is not anywhere near in the top. Well, it's not in the market. It's not in the top 10, and the reason for that is because they've not included the market cap on HEX, so you can't even see HEX anywhere near there. It's actually on page 3, and page 3 is the coins that they manually don't add market cap, which is kind of ridiculous because the market cap is clearly on Etherscan, and a lot of these sites feed all their data from Etherscan. So the fact that it's not in the top 10, someone is manually overriding that to gatekeep HEX basically. And there are other coins that get gate kept, but HEX has had a lot of hate as well. But the fact that it's still been able to reach prices that it has, even with a lot of gatekeeping, it shows the potential of it, and it shows how strong the community is. You know, it doesn't need to be on a top 10 leaderboard for it to go up in price massively. It's more about the community, and if people spot that there's a potential there and there's a good product in the real world, then it doesn't need these big sites. It doesn't need a listing on Coinbase, doesn't need a CoinGecko top 10 position, CoinMarketCap top 10 position. It can do it on its own, and that's what it's proved. So yeah, coin ranking, that's showing as 9, position 9. If you go on to nomics.com, nomics.com is a pretty good site too. this feeds its data from Etherscan, I think. Maybe there's some other process to it, but HEX is top 4 on here. And I don't know if anyone's looked at nomics.com at all, but the fact that a top 4 crypto is displayed on nomics.com and it's not anywhere near on CoinGecko, it kind of sounds a bit shady to me why these big sites would want to stop that. So yeah, HEX is top 4, and you know it's only been launched since about 15th of December, around that date, 2019, 15th of December. That's when HEX was launched. So yeah, and currently the price of HEX is just under 6 cents in pounds, and in dollars it is just over 8 cents. And we'll look at the charts in a second anyway, and see where it's come. But I'm just going to go back to the main function of HEX, which is staking. So this is the HEX website, go.hex.com. And this is where you stake your HEX. So HEX is currently so it's built on Ethereum, and you can get it on Uniswap or anything like that. There's a few other exchanges that you can get it on, but Uniswap or 1inch or any of these decentralized exchanges are the best for buying HEX. Then you'll hold it in your MetaMask wallet, and then yeah, you can stake it or you can keep it liquid. So it's up to you, whatever you want to do. But the real, you know, to use the system to its maximum potential in HEX, it is best to stake, but it's completely your choice. You can do whatever you want. So with HEX, what you do is you stake it, and you get something called a T-share. So this gets pretty advanced pretty quick, but it's the first time, you know, someone might know anyway in the who's watching, but a T-share is basically dictating your interest rate for your length of the stake. So a T-share stands for 1 trillion shares. So currently, to get 1 T-share, it costs 18,143 HEX, which in dollar terms or pound terms, that is currently around 1,081 pounds. So 1,081 pounds to get 1 T-share. And now, like, what is a T-share? Like, what
does that go up in value?
Yeah, the T-shares have gone up in value. So if you bought a T-share maybe in January 2020, a T-share would cost you less than £1, but now it costs over £1,000. So you've got
4,000.
So what? Sorry.
So you can sell that for 1,000 then.
The T-shares you can't sell, but that will. But I'll explain. So you've got 2 things with HEX. You've got the price of the T-share, and you've got the price of HEX. You can't buy T-shares. You only get T-shares through staking HEX. So, but the more the T-share goes up in value, the more valuable your stake becomes.
I'm just gonna butt in for a second. Is this Adam who I worked with? Sorry.
Yeah.
All right. Okay. Welcome. So I'll be honest with you, dude. Because you're not in crypto yet. You're not in crypto yet, are you?
Nah.
Okay. I assume not because of your question. I 100% don't recommend HEX being your first investment because it's a lot more complicated to understand than Bitcoin and Ethereum.
I disagree. For sure, I disagree massively.
All right.
Yeah.
Go ahead. It's your spotlight.
Because actually, Adam, you asked a good question. Like everyone, even people that have been in crypto, they'd ask that same thing. It's a good question, to be honest, because so you've got HEX and you've got the price of HEX, which is the coins that you can buy. And then you can stake HEX. And the only way you get T-shares is through staking HEX. So the T-share only dictates your interest rate. So currently, if you have 1 T-share, we'll just go to it. If you have 1 T-share, you get a daily payout. Today, you get a daily payout of 5.7 HEX. So if you have say you stake HEX for 1 year, and you've got 1 T share, you're going to get 5.7 roughly around, because it does shift. You can see these are all the days since launch, and it does shift. So some days it's a little more, but roughly it's around 5.7, 5.8. So you're getting 5.7 hex per day, roughly. And that will be for your whole length of the stake. So whether you staked for 1 day, or whether you staked for 1 year, whether you staked for 10 years or 15 years, whatever length of stake you've got, if you stake it now and you get 1 T share, you're going to get 5.78 hex a day for the length of your stake. So
let's say if you cash out your like what is it, share, can you still keep your like whatever that T coin is, whatever it was?
No, that's a good question as well, because that's why it's like a lot of people have realized that staking for the longest period is actually the most beneficial.
Like when it
Because
hits the highest peak, then cash it out basically.
Well, no, because when you stake it, your stake is locked up for the duration of that stake. So say you stake it for 10 days, you can cash it out after 10 days. Say you stake it for 1 year, you can end your stake and cash it out after 1 year. But you can end your stake early, but you get heavily penalized, and sometimes you might get penalized over 50% of what you put in. But some people say like, why, but then at the end of the day, you've made that decision to stake it for that period of time. So it's up to you. You've said to the code, because it's just code at the end of the day, that you're going to stake it for a period of time. If you don't stick to what you said, then you have to get penalized. That's just the system. And if you say that there should be no penalty, then yeah, there's no penalty to end stake. But then when the price goes down, you're going to get everyone ending the stakes, and it's the way that it is set up. It is a good system because it encourages people to stick to what they said they would. Sorry, I'm a bit dark here. Stick to what they said they would, and employ a long-term mindset on it. Because say you stake for 15 years, then you're saying to yourself, yeah, I'm really not going to be bothered about pulling anything out for 15 years. And that's a good mindset to be in, because if you're always thinking like, oh, I need to get in crypto and I want to cash out $1 million by this time next year, it doesn't work like that. Some people have done it, but the majority of people, it doesn't work like that. So if you're employing a long-term mindset, 15 years or 10 years, whatever you want to stake it for, then it's beneficial, and you're likely to do really well from it. I mean, if you bought Bitcoin in 2010, for example, at less than 1 penny, it was less than 1 penny in 2010, or 2010 or 9 or around then. If you bought Bitcoin for then and staked it, how well off would you be now? But the amount of people which bought it at a penny, went up to $30 Bitcoin or whatever, sold it, went up to $1,000, went up to $10,000, went up to almost $70,000. How many people wish that they didn't sell it when it was, going up 10x?
So they basically could have made 70,000 if they cashed it out now.
Yeah, exactly. And that is why staking is a beneficial system, because it protects you from yourself at the end of the day. You're not going to be pulling stuff out when your emotions get hit by the market going down or whatever. And you put in a level of detachment there as well. Like you're saying, yeah, I'll stake it for 15 years. Already you're detached from it, because you're saying that like you're not going to touch it for 15 years. And that means that you become kind of liberated from the price movements in cryptocurrency, which on a holistic level is like pretty good, because how many people like have been impacted mentally or whatever through prices going down in the market. And yeah, we don't know what the price of HEX will be when it comes to 15 years, but the way that the system is, I have a lot of belief that it will do really well. If it can go from you know, from nothing to a top 4 crypto or top 9 crypto in 500 and odd days, then, you know, it shows some potential. And I mean, Mr. Harding, you touched upon the flipping in before, like Ethereum flipping in Bitcoin. I think personally, just me, like it's just a matter of time before there's a HEX flipping in. Like I wouldn't be surprised if HEX flips Bitcoin in the near future. I don't know when, but I think it's entirely possible. If you look at it on nomics.com, the market cap of HEX at the moment is 30 billion pounds. The market cap of Bitcoin is 464 billion pounds. HEX only needs to do a 10, 15x, about 12x to flip Bitcoin. So HEX needs to go to 58p to flip Bitcoin. I think that's entirely possible. Yeah, and this market cap, you can get into market cap quite heavily, but it's a bit of a vanity metric because it's not entirely dependent upon, you know, say, you know, it's not entirely dependent upon 430 billion more pounds going into HEX. It's to do with the liquidity that's in the pool, and it gets pretty complicated pretty quick. But it means that, like, if you have a low liquidity in the pool on Uniswap, for example, the price of HEX can go way up.
What's
but
your
Bitcoin's
opinion on
got a
Ticker?
larger. What's my opinion on what? Sorry.
Ticker and the climate
Ticker?
change. Yeah, investing in.
Ticker?
I think you just invest in a company that fight climate change or something like that.
Oh, I don't think Joel's familiar with Ticker. Ticker's just an app. Ticker's just an app. Did I show you that app or not?
Yeah.
Okay, so Ticker, for those that don't know, is just basically an app that rounds up your change. So with regards to Ticker, it's something that I just use to invest my change into. I wouldn't see it as like a serious investment platform. Do you use it at all?
No, I heard it's like quite popular at this time.
Okay, so for those that don't know, Ticker is just an application where you can link your bank card to it, and it's basically used for rounding up change. So for example, say if I spend £1.82, I can set a setting on Ticker to invest 18p, and then you can also have additional settings to double, triple, quadruple, or 5 times your change. That's all Ticker's for investing your change for investing your change in worthy social causes. But I wouldn't see Ticker as any kind of super serious investment opportunity, in my opinion. Anyone who uses Ticker, feel free to give their opinion for making significant gains. Sorry, Joe.
It's quite good. I made 20 grand off it.
You made 20 grand off Ticker?
Yeah.
Oh, okay. Congratulations.
Yeah, thanks.
Congrats.
Nah, I'm joking.
All right, carry on, Joel.
So, I mean, personally, I have full disclosure, like almost 100% of my portfolio is in HEX. I don't invest in Bitcoin, Ethereum, or anything. 100% of my portfolio is in HEX, just because I've seen how good the system is, and it's just better than anything I've seen. That's just my personal opinion, but do your own research on that. So yeah, getting back to HEX as the staking product. So if you have 1 T share, you get in a daily payout of 5.7 HEX a day. So 5.7 HEX a day for the next, say you stake it for 1 year. So I'll just do some quick maths on my calculator. 5.7 to 5.76 HEX. So 5.76 HEX times 365. So you get in 2,100 HEX in 1 year off a 1 year stake. That's off 1 T share. And obviously, you know, that's 1 T share, as we've seen, is about £1,000 worth of HEX. So 2,100 HEX, that is £123 in 1 year. So you've invested in the HEX, you've got 1 T share, and you've got currently, you off that 1 T share, you're getting £123 in that year for 365 days. But then that's not even in the accounting the fact of the HEX price. So initially, you might have staked that 18,000 HEX to get that 1 T share. That 18,000 HEX, that might be worth double, 10x, whatever, like whatever HEX is at that time. So in the system, like I said, you can stake from 1 day all the way up to 15 years. And the longer you stake, the more, the better the T shares you get. So if you stake 18,000 HEX for 15 years, which is like roughly 5,555 days, you're getting 2.97 T shares on that one, as opposed to just the 1 T share for the average length stake. I think the average length stake. Yeah, so if you do it for 365 days, 1 year, you're getting about 1.19 T shares. If you scrap that 1 year, if you stake it for 15 years, you're getting 2.97 T shares. So that means that your T shares has tripled, and also you're getting an extra 14 years of interest. So you're not just doing it for a year, you're doing it for 15 years, and you get in. So right now you get 2.97 T shares. So 2.97, which is the T shares that you've got per day, times the HEX that you get per day off each T share. So you're getting about 5.7 HEX a day per T share. So let's just say it's 3 T shares. 5.7 times 3. So you're getting 17 HEX a day for 15 years. So 17 HEX a day times 1 year is 6,200 HEX. And then times that by 15, that's 93,000. So you're getting almost 100,000 HEX extra as interest. And you're also getting this little bonus here, longer pays better bonus. You get a 36,000 longer pays better bonus. So this figure here, it shows, this is your staking breakdown. So what you can see, I've staked 18,000 HEX, which is roughly £1,000 at the moment, for 15 years. And you can see where the date ends, September 2036, 12th of September. So you've staked it for that, and you've got, this is the breakdown of what you get. So you get a longer pays better bonus of 36,000 HEX, and you get your initial HEX back, which is the 18,000. So currently this is saying 54,000 here. And then you got your interest rate. So you got that 17 HEX per day for 15 years, which is going to be almost an extra 100,000 HEX. So you're getting, effectively, you're getting 150,000 HEX at the end of those 15 years, and you only started with 18,000. So you're getting way more HEX. Who knows what the price will be then? No price speculation really, but if HEX carries on doing what it is, then could be very lucrative. So you're getting 18,000 HEX turned into 150,000 HEX. The price of HEX right now is 8 cents. If that price 10x's or whatever, you've made, a decent amount there. Again, the price could fall, but personally think it will do well. So yeah, this is the staking function. So you stake all your HEX on go.hex.com. You can stake it or you can keep it liquid. Keeping it liquid essentially means you just don't stake it and you can sell it at any time. But just know when you stake it, then you're locking it up for whatever period of time you've said that you would. So we'll just shift over to the price of HEX price chart. And it's still here.
Oh, yeah, I'm still here. I think we might have crashed a little bit though.
Cool, man. Still going. Waiting for this, but we'll go to a different price chart for now. So this right here is the logarithmic HEX chart. And if you look at that chart, I mean, the strength of this chart is pretty incredible. Like, there's been a few big dips, like there always is in crypto, you know, here, but the dips are getting smaller and the lows are getting higher, and the highs are getting higher. So that's always a good sign. And the logarithmic chart is basically the space in between the price movements gets less and less as the price goes up, and that's its logarithmic chart is tends to be good for a stock or a crypto that's had quite an explosive price movement. Because if you look at the small chart, you know, it's had a big explosion, like, and so, you know, sometimes good to look at the logarithmic chart. So logarithmic chart is looking like it's just going up. I mean, the support on, even when it dips heavily, the support is just pretty incredible. And a lot of that, I think, is the strong community behind HEX and the fact that when you stake the HEX, you're locking it up, and that minimizes the sell pressure in the market. So yeah, when you lock it up, some people might say, oh yeah, it's a pyramid scheme, it's a scam, you know, it makes you lock your money up for years. But they've not researched it, because at the end of the day, it's your own decision to. So it's only you really that's made that decision to lock it up. If you're scared and you think it's a pyramid scheme, just hold it liquid. But you know, at the end of the day, it's personal decision. So if you want to lock it up and stake it, then you know you just got to be committed to that. And like all crypto, you can go up and down. But looking at this chart, it looks pretty incredible.
Hasn't HEX outperformed a lot of crypto?
Are there any questions?
It's
mean,
done quite well in this bear run, and seemingly,
yeah, and that's some. Yeah. So it's done well in this bear market, and what I'm going to touch on now, I'm going to leave to a little bit later, but I'll just go for it now. While you asked. So can everyone see this chart?
Yes.
Yeah.
Okay. So this looks maybe a little bit all over the place the first time you look at it. Looking at a bunch of squiggly lines, right? Up and down. That's what everyone see. Yeah.
Yes, we see the lines.
Yes. Carry on, Joel.
Yeah. Okay, cool. You can see that looking at a rolling correlation chart right now.
Joel, you there?
Yeah. Yeah, I'm here. It's my connection a bit.
Just turn off your camera. It might help.
Did my connection go?
You're back now, I think.
Okay. All right. I'm just going to share that again. So everyone, this is the correlation chart. So I don't know how many people know the term correlation. Probably some of you do. But a correlation is basically how correlated an asset is to another asset. So you're with a correlation, you're always comparing one asset against another or something against another. So in this instance, is comparing Ethereum to HEX, and a correlation can be anywhere from -1 to +1, or -100% to +100%. And a correlation I mean, some of you might already know, but I'll just go over it again, just in case. And correlation essentially means, say you've got the price of Ethereum and the price of HEX. If HEX was positively correlated to Ethereum, that would mean when the price of Ethereum goes up, the price of HEX goes up. And the price of Ethereum goes down, the price of HEX goes down. So that would be a positive correlation because they're linked together in some way. A positive correlation would be 1 or 100%. A negative correlation would be minus 100% or -1. If it's got a negative correlation, that means when the price, say for example, Ethereum and HEX again, if the price of Ethereum goes down, the price of HEX goes up. If Ethereum goes up, the price of HEX goes down. So that's a negative correlation. They do the opposite from each other. A zero correlation is when it's not affected. So say the price of Ethereum goes up, HEX might not follow it. The price of Ethereum goes down, HEX might not follow it. It does its own thing. And in this market, in the crypto market, a lot of almost, I'd say 99% of coins at least are correlated to Bitcoin in one sense or the other. So whatever Bitcoin does, it affects the rest of the market. It affects the rest of the coins. And we see that, all the time. We saw that recently in the big dips and everything. Like Bitcoin dipped, everything else dipped. Bitcoin went up, everything else recovered. And looking at this chart, I'll show you how to break it down now, but it's basically, this was a chart done by a YouTuber called Rails Only, if you want to check that out. He's just got some really insightful videos on the charts. So we'll go into how to break this down. So you're looking for in crypto, you kind of want, in some way, you do want a decorrelated asset. You want an asset which is not connected to anything, because if the price of Bitcoin drops massively or whatever, there's a big market correction. If it's a decorrelated asset, it will do its own thing. So maybe it's not falling within the normal bull and bear market cycles. And HEX has actually shown that recently. So we'll break it down. So the line is, you've got 21-day correlation, 34-day correlation, 5-day correlation, and then you've got the HEX price. This HEX price is not really needed in this chart. You can probably just ignore this. This is just like to show where HEX is at certain periods of time. So the price, these lines are wicking up and down, up and down, up and down. And what this essentially means is that it's decorrelated. Sometimes it's correlated, sometimes it's negatively correlated, but most of the time it's decorrelated. If HEX was purely, and this is comparing Ethereum to HEX, by the way. So if HEX was positively correlated to Ethereum, that means when the price goes, Ethereum goes up, HEX goes up. When the price of Ethereum goes down, HEX goes down. If that was the case, you would see a solid flat line here. Like it would just be flat line at 100%, and that would be a positive correlation. If it was negatively correlated, if the price of Ethereum went down, HEX went up, price of Ethereum went up, HEX went down, you'd see a negative correlation line, and it would go all the way along the bottom here, minus 100%. But it's not doing that. It's wicking up and down. Sometimes stays up here. Yeah, it's positively correlated for a little bit, then goes right down. Yeah, it's negatively correlated for a little bit, goes up, wicks up, down, up, down. So this shows that it is doing its own thing from the rest of the market, and the maths doesn't lie at the end of the day. The price doesn't lie, the maths don't lie. So it's not an opinion. It's decorrelated from the rest of the market. And we'll look at Bitcoin quickly. There's also another correlation chart to Bitcoin. So this also shows that, again, it's not correlated. It's got a zero correlation. So it's, again, wicking up and down. Sometimes it's a little bit positively correlated for a tiny bit of time. Down again, like that shows that it's still not falling in line with the Bitcoin movement. It's not falling in line with the Ethereum movements. So that essentially means that even though whatever market we're in at the moment, people are unsure whether it's going to be bear market or whether the bull market's going to, pull back. But whatever market we're in at the moment, if HEX is decorrelated to the rest of the market, HEX may have way longer to go in its own bull market. So that is correlation. And I wanted to touch upon that because the question you brought up, Fadlan, was a good one.
No worries. Really appreciate that. What we're going to do now is going to just go to a quick Q&A, just an open Q&A like we always do, and just go through anyone that's on the call and just ask them if they've got any questions in relation to anything that Joel's gone over, anything about crypto or stock market, or anything that they are looking at the moment that they want our kind of like second opinion or a second guess on. So we'll start with Mr. Michael Mora. How you doing, buddy?
Yo, sorry I didn't make it earlier.
No worries.
I missed a bit of the call, but I want to know what's the future for you, Joel.
What's the future for me personally?
Yeah, what are your I don't know, what are you aiming for in like the next years, like 2 years, 5 years? What are you aiming for? I'm
aiming for more time on my hands. So, to have the more time, obviously you need to have the financial freedom to be able to have the time, but that's my aim. I mean, I've got, if you're talking about crypto related, then, my personal portfolio is 100% HEX. Like I don't invest in anything else just because of the mental freedom that it's given me. Like I don't have to worry about the day-to-day price swings, don't have to worry about the, price swings to the end of the year or even next year, because a lot of the HEX is staked for a long period of time, anywhere from like 1 year to 15 years. So my aim is just to live life, and I don't even have to look at the chart really in this time. Like the only time I really need to look at the chart is when the stake ends, and then I can decide if I want to cash it out or stake it for the future again. Obviously, you've got to live in between, so it's good to take profits and things. But my ultimate aim is time, and to have more time and explore research and other things that I'm interested in.
Yeah, sounds pretty nice. And I like it that you play it slow and steady, because slow and steady always wins. And I'm kind of new to the whole crypto stocks and saving up for the future. And right now I'm hoping that it will work out, and I have a lot of research to do, but Fadlan and Michael know that. So yeah, it was nice that you're on the call, and I appreciate that Fadlan and Michael are taking the time to get people on the call. So thanks a lot.
Yeah, nice to speak to you, Michael.
Thanks for coming.
Well, I'll just answer Aisha's question that she just popped in the chat, which was about XRP. She's on the treadmill. Go, Aisha. Yes, on the treadmill. Love that. What's everyone's view on XRP at this moment in time? It's funny that you say that, because I literally just wrote out an essay for someone that asked me about it. So I will just quickly read it because it's easier than anything. Let me just find it. It's not like a long, boring essay. Don't worry. It's not me going on one of my little rants. It is slightly, but just not fully. Okay, so XRP, I genuinely believe it can get to $10. That's the main thing. So there's definitely a 10x in it. But a lot of people are talking about XRP getting to like $100, $1,000, so on and so forth. But there's a video that I'm going to post and share, and it's one of the developers of something on the XRP blockchain called Corda. And what he's basically saying is what I've been saying for a long time as well, is that the big money and the developers aren't going to want everybody to make the gains from it. Like, crypto was mainly created to decentralize finance, but what's going to end up happening with XRP and with Ethereum is it's just going to become centralized again. So we're kind of defeating the object of it. And what I see with XRP is what's already happening is that a private version of XRP is being made and is being used by the Fed and by some of the big banks. Just because why would they want the ordinary person to get exposure? Because then it stops them using them. Alternatively, if they do pair it with the kind of and give the public exposure, the reason to make banks use of XRP paired to public would be to track every transaction of the public with a USD coin wrapped on top of the XRP, but issued by the Fed, and replace all stable coins like Tether and USD coin and give all the data to the Fed and pair that with a universal basic income to get more data out of consumer behavior, which if wrapped would make sense of the excess money printing as the bond market has dipped and junk bonds are at an all-time high. Wrapped Fed coin increases value of USD and USD bonds, positioning the Fed as the be-all and end-all of global finance. So it would mean majorly crashing all assets, including housing, gold, food, stocks, crypto, everything to drive money into bonds and allowing for you to get more for your dollar. But this time, Fed issued USD coin paired to the dollar, meaning that the US dollar stays as a reserve global currency and has a dramatic spike in value alongside that all that's been issued, meaning the majority of banks technically are owned by the Fed and nobody would actually own any assets as they would be paired to the Fed coin that's technically lent to people, and everyone making a transaction, every transaction ever would end up going through the Fed, thus making sense of Gary Gensler being appointed head of the SEC, as he's someone that was previously giving lectures on blockchain. So in conclusion, step one, give out loads of something with little value in comparison to the assets whilst keeping the majority for yourself. Step two, decrease the value of all assets except what you gave out, theoretically making your thing appear to have more value. Step three, buy assets and encourage others to purchase assets with the item you gave out, and now pair that to an asset, and even more of that also allows you to track and have all asset purchases run through you. And a few people get rich, but will need to then buy other assets. And guess what they'll do that with? The original item that you gave them out that had very little value, making you have more power and more control and more data than ever, thus completing and centralizing the whole entire global financial system. So yeah, that's my view on XRP. It's good, but it's very, very dangerous. So yeah, that's my.
I'll just answer this question about HEX as well. Is there a minimum amount to stake HEX? There's no minimum amount to stake HEX. Sorry, I'm super dark. There's no minimum amount to stake HEX, but it's you just want to make it affordable for the gas fee. So like, obviously when you transacted on the Ethereum network, there's a gas fee, and that gas fee might be a little bit, like right now, it might be like £10 to buy something on Uniswap, might be like £2 or £3, £4 to stake it. So you can stake as little HEX as you want, but you just want to make it efficient for minimizing, you know, you've got to factor in the gas fee that it costs to buy HEX and also stake HEX. So yeah.
Fair enough. And then AJ, let's go to yourself. AJ, any questions, anything you're looking at, any questions for anyone?
We really appreciate AJ. I think she's been on every call for like 2 months.
Yes,
always here supporting you guys. I'm good actually. I think I don't really have any questions at this point.
Cool.
I'm just really appreciative of you guys, you know, giving us your time and knowledge. Thank you for that.
Appreciate you too.
Gratitude.
Chris APL, what are you saying, broski?
Okay.
Great session, lads. Learned a lot. I loved Michael's breakdown of how the whales are affecting the market at the moment. I feel sorry for everybody with the weak hands that, you know, dropped the bag, but, you know, the diamond hand stays strong. And I appreciate the special guest speaker today giving me the drop on HEX. That's something I'm definitely going to look to get into as I build my portfolio. But I'm a big fan of blockchain Sensei, and I'm locked into the content. Thank you, lads.
Appreciate that. Can I just say, So obviously, me and Mr. Harding have a different opinion on having 100% of your asset in something. Joel is obviously very, 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 very confident and knowledgeable in HEX. One thing that I will say is invest. I said this in an interview with Ms. Harding as well. Invest as your knowledge of the asset increases. So once you know, like, if you know this, if you understand this much, but you have this much to invest, we'll invest this much. Does that make sense? And as your confidence and knowledge grows to this much, even if you've got this much to invest, you should invest this much. So, I'll be honest, HEX makes up for 3% of my portfolio, though I do believe in it. Yeah, he is very bullish on HEX. So just be sure to invest what you're comfortable with as your knowledge grows in that thing.
Also throwing
That's a good point. I mean, I've stuck to that as well. Like, the more research I've done into HEX, the more I've invested in it, because just my belief in it is pretty solid. Yeah, the price could go to zero. I'm prepared for that, whatever. I took the profits, so is what it is. I've took out more than what I invested in, so anything I've got now is just riding.
You see
yeah.
that? What he
Please deep that, guys. Anyone? He's already in profit. He's already in profit.
That's the game.
Yeah.
Let's wrap that one up there. Thank you very much.
We can wrap up there.
And we'll see you all next week.
Well, guys, it's been a pleasure.
Thank you very much.
Thank you very much.
Yeah, and just to say this, thank you, Mr. Harding, as well, for having me. And just to add one more quick thing before we go, like, there is so much more about HEX. One of the big things is that it's creating its own blockchain, which is going to rival Ethereum, and it's called the Pulse chain. So we didn't have time to go into that at all, but like, the Pulse chain is going to be its own blockchain, and you can get Pulse coins. Pulse will be the native coin on the Pulse chain, like Ethereum is the native coin on the Ethereum blockchain. So you can get Pulse coins by sacrificing any ERC20 token. So you can also, so if you hold any ERC20 tokens, you get a 1-for-1 on the Pulse chain. So Pulse will be like, you know, like Binance Smart Chain. Like, you can also hold the same coins on Binance Smart Chain. Pulse will be like, not the same, but like similar in a way, because whatever ERC20 token you hold in, you'll get a 1-for-1 of that same ERC20 token on the Pulse chain, and it'll be classed as a PRC20 token.
Wait.
And so,
but different ERC20 tokens have different values. So what if I've got 1 million shit coins, like 1 million coins from the ERC20 network?
The price is not going to be mirrored on each blockchain. The price is not going to be mirrored. So for all coins, whether that's Uniswap or whatever ERC20 token that's now going to be on Pulse as well, it'll be in price discovery mode. So there'll be no set price until the market decides it. So you can sacrifice any ERC20. You can get a 1-for. If you don't sacrifice coins, you can get a 1-for-1 split. If you do sacrifice it, you get about 1,000 times more on the Pulse chain, 1,000 times more Pulse coins on the Pulse chain, which is complicated to explain because the full process has not been published yet. It's going to be published probably either in the next few days or next few weeks. It's very soon. Pulse chain is going to launch very soon. But if you sacrifice your coins, which essentially means, yeah, I'm going to sacrifice 1 Ethereum. So you're going to completely sacrifice that. But in return, you'll get a lot more Pulse coins than if you didn't sacrifice it. And so what a lot of people are doing now, they're buying HEX to sacrifice HEX, because HEX is also going to be on the Pulse chain. So it's a complicated thing, and so many things which I can't explain fully yet, because the document hasn't been published to say how the sacrifice process will work. But there is, if you do search Pulse chain on YouTube, there's a lot of content creators talking about that, and it's a new blockchain at the end of the day. And you know, blockchains have a high market cap because, you know, they're popular. So we could see that up there pretty soon in the rankings.
Appreciate the information plug. I guess we're good to wrap up here. Joel has kindly sacrificed a lot of his time to be here. Thank you, everyone that's here. And unless we've got any final words from Mr. Harding, guess that session wrapped. Season 2, episode 2, baby.
See you later, guys. Bye.